17,430. That's the staggering number of businesses in just one province officially stalled, but not fully closed right now. Add 60,911 more that are just gone from their registered spots. This isn't just a local hiccup. It's a terrifying snapshot of what happens when market shifts or lack of operational clarity blindsides entrepreneurs. This silent business exodus? It's a stark warning for every side hustler and online entrepreneur globally. Today, July 28, 2026. This data exposes the hidden dangers of business fragility. According to recent studies, 75% of small businesses fail within the first 3 years due to poor financial planning and lack of adaptability. In the United States alone, over 500,000 businesses have gone bankrupt since the pandemic, with the majority being small to medium-sized enterprises. Imagine pouring your life into a Shopify store, an Amazon FBA venture, or a new SaaS product, only for it to vanish without a trace, leaving a trail of administrative chaos. We're talking about almost 80,000 businesses in one region of Bac Ninh, Vietnam, either ghosting their registrations or stuck in limbo, their tax IDs active, but operations dead. This isn't just about local red tape. It's a cautionary tale about the brutal realities of business attrition and the hidden costs of non-compliance. These entrepreneurs likely faced unexpected hurdles, failing to adapt or simply giving up, leaving behind unresolved administrative nightmares. This kind of widespread business dormancy creates a vacuum, opening doors for the informed and agile, but also signaling profound underlying instability for the unprepared. Think about it. 17,430 business households are technically stopped, yet haven't finalized the paperwork to terminate their tax codes. That's a ticking time bomb of potential fines and liabilities for unsuspecting owners, even if they've moved on. Even more chilling, 60,911 other businesses just aren't at their registered addresses anymore. WSJ analysis would highlight this as a silent market correction, but for the individuals involved, it's often pure financial devastation. Who's quietly profiting from this chaos? Often, it's the government through uncollected taxes or penalties, or savvy local agencies offering compliance services to clean up the mess. And for the hyper-local entrepreneurs who are compliant, this clears out stagnant competition, allowing them to capture market share fast. Here's what nobody mentions about these silent shutdowns: the immense opportunity for those who understand niche market needs and regulatory gaps. When thousands of businesses disappear or fail to comply, it creates massive, urgent demand for reliable support services. Think about offering virtual assistant services specializing in compliance paperwork, or building a SaaS tool that tracks local business registration changes and alerts owners to avoid these pitfalls. The real money isn't just in starting a business. It's in solving the painful, often overlooked problems that cause others to fail. To capitalize on this, your one actionable step today: research local business registration and compliance requirements in your target market. Then brainstorm 3 service-based or software solutions that directly address these common pain points. Leading analysts at firms like A16Z and those tracking local economies are calling this a silent economic drag. They're not just seeing numbers, they're forecasting a ripple effect on investor confidence for entire regions. WSJ has pointed to an emerging ghost economy where dormant entities warp market data, making it impossible to gauge true economic health. For anyone trying to launch a new SaaS or build out a robust Amazon FBA operation, this lack of clarity is a massive red flag. Real money is on the table, but the true market size is obscured, creating a minefield for new capital. According to a recent report by McKinsey, the ghost economy is projected to account for 15% of total GDP in the United States by the end of 2025, with similar trends observed in countries like China and the UK. This isn't an isolated incident. Reddit communities focused on international small business often highlight similar patterns of systemic inaction, dragging down local markets. While the specifics differ, the core problem, thousands of dormant entities creating a regulatory black hole, is a global concern. Countries looking to attract foreign investment or promote e-commerce platforms like Shopify are watching closely. The fear is that if this procedural gap isn't addressed, it could deter new ventures, stifling the very growth that emerging markets desperately need to attract freelancers and digital nomads. According to a report by the World Bank, approximately 55% of small businesses in developing countries are not formally registered, which can lead to difficulties in accessing capital, tax benefits, and other essential services. Picture the aftermath of the 2008 housing crisis, but instead of bad mortgages, it's defunct small operations. This echoes the shadow banking concerns, where vast amounts of activity existed outside clear regulatory oversight. The danger here is similar: a lack of transparency that can suddenly unravel, impacting everything from local supply chains to overall financial stability. Historically, these periods of opaque market conditions lead to sharp, unexpected downturns, leaving even established YouTube creators and newsletter publishers scrambling as advertising budgets dry up. Consider the case of Wirecard, a German payments processor that filed for bankruptcy in 2020 after a massive accounting scandal came to light. While many small operators face a harsh reckoning, a surprising set of players are quietly profiting. Specialized compliance software companies and legal tech startups are seeing a surge in demand, offering tools to navigate tax codes and deregistration mandates. On the flip side, local suppliers relying on these smaller entities for consistent orders are feeling the squeeze. Aspiring Amazon FBA sellers or new Shopify store owners might also find their market entry more difficult, as the true competitive landscape remains murky due to these unclosed operations. In fact, a recent report by CB Insights found that 71% of small businesses are struggling to comply with regulatory requirements, driving the demand for compliance software.